There are more and more individuals trading Forex in recent years. If you are also someone considering joining this group, have you ever wondered what role our individual trader community plays in the global foreign exchange market? Are we major players on this field such that our trading decisions collectively have a major impact on the exchange rates? If not, are there any major players in the Forex market? It is not very easy to answer this question. Since compared to other markets like the stock market, the structure of the foreign exchange market is much more complicated. It is a highly decentralized market with various participants trading many different types of financial instruments actively 24 hours every working day. This video tries to shed some light on the Forex market. The content is mainly based on the 2019 BIS Triennial Central Bank Survey, the most comprehensive source of information for global foreign exchange market. I will try to give you a basic idea of the structure and major participants of this wild yet fascinating field. One of the most important features of the foreign exchange market is that it is a decentralized market. There is no central supervision institution like a stock exchange. Trading could happen through direct negotiation among different parties and take place on different systems. For example, large commercial and investment banks could trade Forex instruments through interbank broker systems, which are electronic trading platforms that interconnect hundreds of large banks. An export company could directly buy or sell currencies with a commercial bank to pay its domestic workers' salary or buy import raw materials. It might also buy other Forex instruments from the bank to hedge its risk brought by fluctuations of exchange rates. Because of this reason, there is few or no official price data for any given Forex instrument. You might find slightly different prices in different places. And gathering statistics for foreign exchange market is a difficult work. Global Forex market operates 24 hours a day, 5 days a week. In April 2019, its daily average turnover reaches $6.6 trillion, which is much more than the global stock market. The $6.6 trillion amount composes of different Forex instruments. Around 30% comes from spot transactions, 50% comes from Forex swaps, 15% comes from forwards and other 15% comes from other instruments. US dollar dominates the foreign exchange market, being on one side of 88% of all trades. Other most traded currencies include Euro, Japanese yen, British pound, Australian dollar and Canadian dollar. Geographically, most Forex trades take place in British and America, with these two countries occupying 43% and 17% of the total turnover separately. The $6.6 trillion daily turnover could also be classified by counterparty. The BIS report collects data from over 1,000 report dealers, which are mainly large commercial and investment banks that actively buy and sell Forex instruments for themselves or their institutional customers. Global Forex trades could be classified according to which counterparty these report dealers are trading with. They could trade Forex instruments among themselves through interbank trading platforms. They could also trade with their customers through their own platforms, which are further divided into two types. One is other financial institutions that do not belong to report dealers like small regional banks and hedge funds. The other is their non-financial customers like international corporations and rich individuals. In the past, trades among report dealers dominate the foreign exchange market. People used to refer to trading among large banks as interbank market and trading involving other parties as over-the-counter market. With financial innovation and technology development, the dominant position of report dealers in Forex market is weakening, and the boundary between interbank market and over-the-counter market is blurring. For 2019, trades between report dealers and other financial institutions increases to 55% of the total daily turnover volume, exceeding the inter-dealer trading volume, which occupies 38%. Trades between report dealers and their non-financial customers only occupies a small portion of the total volume, which is 7%. Nowadays, some investment firms and hedge funds could even be granted access to the interbank trading platforms that traditionally only open to large dealers. By now, I have given you an overview of the structure of the foreign exchange market. But you might still wonder, where is your position as an individual trader? Well, individual traders gain their access to the Forex market through retail brokerage firms, which are your brokers. Generally speaking, these brokerage firms build relationship with several commercial banks, they bundle many individual small trades together and lay them off in the inter-dealer market through their partner banks. The prices you see from your broker are prices provided by these banks, which usually are modified a little bit by your broker to incorporate its profit. These retail brokerage firms belong to other financial institutions, which means they are counterparties of report dealers. Though retail forex trading has grown quickly in recent years, they are still a very tiny slice of the total market, which only occupies less than 3% of daily turnover volume. So individual traders in a whole has very little effect on the global forex market. Here comes the end of our tour of the global foreign exchange market. It is a highly decentralized market with large banks and financial institutions as major participants. Though interbank trading once dominates this market, now the structure and dynamics of this market are becoming more complicated. Individual traders still have little impact in this market. All of these special properties should be considered when designing your trading strategies. Thanks for watching.